Do you want to know how much cash will come in your business in the next 3 months? Do you want to plan investments for your future growth now? Then this video is for you. Hi, I'm Shishir. I'm financial transformation coach for female entrepreneurs who wants to scale their business fast. If you want to transform your business from shaky finance to financial prosperity, then don't forget to subscribe and hit the notification bell right now so that you do not miss out on future new videos. The cash flow projection insights that I'm going to share with you today are based on my own journey as a financial coach, helping entrepreneurs like you running businesses from 40,000 to 40 million pounds in revenue. So let's dive in and talk about cash flow projection. Do you ask yourself the questions like, will I have enough cash to pay all the bills in the next 6 months? Can I go on holiday without worrying about paying bills on time? Can I invest in my business growth after 3 months? Can I predict my future cash position in 3 months or 6 months time? What's going to look like today so that I can take appropriate action, maybe get an overdraft facility or a bank loan? Imagine we could have answers to these questions just by doing cash flow projections accurately. What is a cash flow projection? Cash flow projection is your best guess how you think cash will flow in your business. If you want to predict future cash flow, then you need to create a cash flow projection. You can do that on a monthly, quarterly, half yearly, or daily basis. It's good practice to have cash flow projection done at least on 3-month, quarterly, rolling basis. By doing this, you have time to react to any potential shortfall or even take advantage of cash flow surplus. Why you need cash flow projection as an entrepreneur? You may need it for various reasons like predicting future cash shortages or surpluses, assessing whether you can afford to hire an next employee or extra pair of hands, establishing if you need to cut costs, proving your ability to pay back the loan to the potential lender on time, and estimating effects of big changes like developing and selling a new product. Myths about cash flow projection. But you may be thinking, Shishir, my business is too small. Do I still need a cash flow projection? It's not about how small or big your business is or the numbers are. It's more about the process of cash flow projection. A business doing $1 million in revenue and having $100,000 in cash is equally concerned about the survival and growth as a business doing $100,000 in revenue and having $10,000 in cash. The risk may be different, but the dynamics are the same. And also, if you don't know how to manage and protect $10,000 in cash, chances are you don't know how to do that when you have $100,000 in cash if you reach there. You need to have a mechanism to manage cash flow. Without this mechanism, you will find it very hard to create and manage cash flow. Let me explain. If you knew you could invest $5 into something and get in return $8, would you do it? Yes or no? Yes, I would. Who won't? The problem is either you don't know you have $5 to spend, or you have $5, you're scared of spending it. Cash flow projection gives you this clarity and confidence whether you can spend this $5 or not. And if you foresee cash crunch that can happen at times, then you can safeguard against it. I'm a creative person. I hate maths and it's too complicated. You don't have to go to gym to get fit. Similarly, you don't have to be a maths whiz to develop financial literacy. I brought up financial literacy because it's one of the most crucial skills that you need to develop to build a sustainable and profitable business. As Warren Buffett says, the language of business is accounting. Let me ask you a question. If you don't know the language, how will you communicate? It's the job of an accountant or a bookkeeper. Most businesses employ accountants and bookkeepers to manage their finances, and yet 82% of small businesses fail because of two reasons. Number one, poor management cash flow, and number two, poor understanding of cash flow. I believe you can outsource the task of managing cash flow, but you cannot outsource the responsibility of managing cash flow because it's your cash flow to win in your business and be amongst the 18% who survive and succeed in the business because they have taken the responsibility of managing their own cash flow. How do you do cash flow projection as an entrepreneur? Let's say it's 1st of April 2020. Your cash balance is $100,000. This is your starting position. Then what you need to do is project cash inflow for the next period from accounts receivable. Based on previous sales period and current sales pipeline, make the best guess of your sales month by month for the next period. Once you've done that, based on the terms of the sale, add the cash that is going to hit your bank account for those sales. For example, you might make a sale on 18th of April and the terms of the sale are payment are due within 20 days time. So you may not receive the cash until May. So you need to record projected cash in May column. Let's say based on your projections, you are going to receive $300,000, $50,000, $100,000 and $150,000 in April, May and June respectively. Now let's look at the cash going out section. Project cash going out for the next period from accounts payable. Again, based on previous period, make the best guess of expenses to pay for the next period. Once you've done that, decide when to pay and how much to pay the expenses because you have more control of, and put the expenses that you're going to pay in the cash going out section from your bank account. For example, you might receive an invoice on 18th of April, but if you only decide to pay in May, then you should record this in cash going out section in May projected balance. Let's say that your total cash going out projected cash balance is $150,000 for the next 3 months, which is $25,000, $50,000 and $75,000 in April, May and June respectively. Now you have projected cash inflow as well as cash outflow for the next 3 months. Now let's look at the net projected cash balance for the next 3 months. Take away projected cash out from cash in. This is called the net projected cash flow movement. Projected cash inflow minus projected cash outflow equals projected net cash flow movement. In this example I've shared with you, projected cash inflow of $300,000 minus projected cash outflow for $150,000 equals projected net cash flow movement of $150,000. Now we need to do one more final thing. Your projected cash flow. Once you have established net cash flow movement, then all you need to do is to add opening balance to have projected cash flow. Projected cash flow equals opening bank balance plus estimated net cash flow movement. In this example, projected cash flow equals $100,000 plus $150,000, so equals $250,000. So what does this tell you? This tells you you will have $250,000 at the end of June provided your cash collection and cash payments happen as projected on 1st of April 2020. Imagine how powerful this information is to you as an entrepreneur. Now you know you have enough funds to pay for all the bills when you go on holiday without worrying about it. Now you also know whether you can make bigger investments such as hiring next employee, moving on to bigger premises, updating website, etc. without affecting day-to-day set-aside cash for your day-to-day operations. You also know whether you're going to have any shortfall or not so that you can apply for borrowings on time. Let's assume the cash can come in and cash can go out will be the complete opposite of what I've said above. So the cash can come in will be $175,000, whereas cash can go out will be $300,000. So the estimated net cash outflow will be $125,000. But you only have $100,000 on 1st of April 2020. So you will have $25,000 shortfall of cash flow. Now you have time to apply for a loan from the bank, seek for investment, cut cost, and change your commercial decision to alter the net cash flow movement. Not knowing where you are in terms of cash position today and near future is one of the biggest killers of the business. It's a bit like Titanic before it hit an iceberg. By the time crew realized the danger, it had lost all the options to avert the tragedy. If you don't realize that you don't have enough cash to cover to pay for the bills and you only come to know on a real-time basis, then you don't have time to seek for external funding. Being in such a situation is an accident waiting to happen in business. It's called a business failure. And you can avoid this by doing cash flow projection. There you have it, comprehensive cash flow projection insights. What it is and why cash flow projection is so crucial to you as an entrepreneur. If you got value from this video, then like it and share it. Don't forget to subscribe and hit the notification bell right now so that you do not miss out on future new videos, which I publish every Tuesday at 4 p.m. GMT. Your comments are my oxygen, so don't forget to comment below. I respond to them all. Now, I would like to turn over to you. Do you do cash flow projection in your business? Let me know by leaving a comment below.